right, Michael, welcome to the WealthTech podcast. I am happy to have you on the show. I wonder if you wouldn't mind doing a brief introduction of yourself and Cerulli.
I guess I'll start with myself. So I started my career as a market research and consultant at a firm called IDC, which is a global market research firm. In that, I spent about 5 years there focused on infrastructure software. From there, I went back to school. I got a master's degree in tax, and I worked in wealth management for about a decade. So I have a CFP, a master's in tax, and I worked mainly with the high net worth, kind of ultra high net worth client base. And after doing that for about a decade, I knew of Cerulli through just being in the industry. And there was a role that opened up here. It was actually one block away from the firm that I was at the time. And so I decided to make a transition so I could better understand the industry kind of holistically in a way that you can't really understand it when you're in the weeds at a given firm working with clients. And so my role here is the director of wealth management research. So I lead a research team of about 15 people. In our vertical within Cerulli, we're looking at really wealth management from every conceivable angle. So we publish annual reports that our clients subscribe to, about 7 reports on our team, and they are pretty comprehensive studies looking at a particular aspect of the wealth management space. So we have a report on RIA firms, a report on broker-dealers, we have a report on wealth management technology, which I lead. More broadly at Cerulli, we have a variety of research verticals. So Cerulli is a market research and consulting firm specializing in the asset and wealth management industries. Our primary product is the annual reports that we publish. We have about 50 people at the firm here in Boston. And our research verticals outside of wealth management include managed accounts, product development and design, retail investors, and institutional investors. So we're really looking at the asset and wealth management industry pretty comprehensively.
Well, I'm sure having spent a decade on the other side of the desk, it helps to inform some of your research or gives you a better insight into that. One of the reports that you guys have is the state of wealth management technology. Just kind of high picture, big picture. What is the state of U.S. Wealth management? Well, maybe you could just even back it up a second. You could just define wealth management. It's obviously a big term, and who might be within that categorization. And then if you could just talk to me about what is the state of wealth management technology in 2025?
Yeah, sure. It's a good question. So when we discuss wealth management, we're really talking about retail investors who look to a professional advisor to manage their investments or, beyond that, their personal financial affairs. And that encapsulates, every advisor from, the single family office, multifamily office to private banks to, all the various permutations of broker dealers through to independent hybrid REAs and independent broker dealers. So, when we talk about wealth management, we're really talking about retail investment management and financial planning. Yeah, in terms of the general state of wealth management technology, I would say, the industry is pretty mature, right? Wealth management is an established business. And, what we see in our research is that, the utilization of technology to enable the primary functions that happen within a wealth management firm and an advisor practice. On the investment side, advisors are pretty extensively using technology to deliver their services. Where we see a little bit of a drop off is when we look at some of the operational technology. So things like fee billing or client portal. That's where we start to see a little drop off in terms of utilization, and I think potential opportunity for vendors who are offering solutions in that space.
It seems like that back end investment reporting, back office functionality in terms of getting portfolio management, investment reporting has been in place for a while. That the advisors kind of gone through that wave and probably even gone through second and third waves and replacing their back office accounting systems. But you're saying that there's more room to be had on the front end in terms of client-facing technology?
Yeah, client facing in really technology that's kind of enabling the practice. So things like digital marketing, CRM, even, a lot of firms deploy CRM, but utilization and adoption is not as high as I think it potentially could be, and could really be an enabler of advisor practices instead of really just a check the box action. And we can talk about this in a little bit more detail later, but certainly the innovation that's happening in terms of I think is you know, top of the first inning. There's a lot of room for AI to kind of enable advisors to do what they do more efficiently. It's been pretty slow to roll out so far, but we think long term it is going to have an impact on what the advisor practice looks like in the future.
Certainly, with the demographics going on, I mean, the industry has struggled to be able to attract and retain talent. I think the average age of an advisor is mid 50s or late 50s. So there's a need for succession planning and being able to bring in the next gen. But hopefully, some of these technologies can kind of mitigate that, make that advisor certainly more productive. I want to kind of drill in on those 2 points that you talked about a little bit around CRM adoption and MarTech in particular. I think a lot of times advisors have kind of relied on the passive referral. Certainly markets have gone up and that has helped them revenue wise, but they've also kind of been more passive in terms of their growth strategy. You're seeing advisors now putting more focus on inbound marketing and being able to enhance their organic growth beyond the referral.
Not yet, and I think that's an area. If we look across, advisors' operations, I think our perspective is that digital marketing tools, particularly leveraging AI to enable advisors to engage the marketplace more efficiently, we think there's a lot of potential upside. To your point, Mark, it's really interesting. So we've run a survey of advisors for well over a decade. We survey close to 2,000 advisors every year. One of the questions that we consistently ask them is, what the source of their new business is, and what the practices or what the challenges that they experience in their practice are. The number one challenge consistently that we've heard from advisors is new business development. Um, and at the same time, most new business for advisors, new assets coming in, are referrals from existing clients. And so, to your earlier point, bringing in that next generation of advisor talent has been a real challenge, right? Because it's a chicken and the egg problem. Like you can bring in a talented advisor, but if he doesn't have an existing book, and
Right.
the vast majority of new advisor assets are coming from an existing book, it's a huge challenge. And that's why we see such huge failure rates in this industry, failure rates of 75% and up. And so, I think the younger advisors coming into the industry are more committed to leveraging, social media and other digital marketing approaches. But the rest of the industry is still, I think, slower than they probably should be at adopting those tools. And there are a lot of impediments to doing it, right? Compliance is a big challenge. To your point, Mark, the average advisor is older and probably less familiar with social media than the next generation of advisors coming in. So there are a lot of, it's not an easy challenge to solve, but I think as technology matures, as tech vendors and home offices incorporate AI to enable advisors to more efficiently market and engage with social media, I think that's going to be a win for advisors long term.
Yeah, I think there are some challenges that are not to be, minimized. I mean, compliance is certainly significant, and you need probably industry specific tools that help you with that compliance. I think there are some great ones out there. Finney, for example, AI tool that it almost seems like magic what it does in terms of prospecting. But that's the power that you can have with AI and be able to outreach at scale. With CRM adoption I mean, some of that is around prospecting, but also some of the CRM is around client management. Certainly when their advisors are not great at maintaining their CRM, then they don't trust it and you end up in this cycle of doom. But what are some of the primary reasons for lack of adoption with CRM?
Yeah, man, I think you hit the nail on the head. I think the number one challenge is time, right? So again, our advisor survey data demonstrates very clearly that advisors are very pressed for time.
Yeah.
I think a really important big picture trend is that advisors are increasingly required to offer more services to their clients to maintain their fee. What we refer to as margin compression, and as a result, advisors just have less time to dedicate to non-client facing and non-critical tasks. And CRM, and for many advisors, if you ask them, it's kind of a check the box compliance requirement. And to your point, like if you're not investing the time and energy needed to kind of maintain in your CRM data set, and you're not familiar with how to leverage that as effectively as possible, then it becomes a time suck for you. And that challenge is not unique to wealth management. I mean,
Yeah.
tell me a person who works at a large company is happy with their firm's CRM. But I think there's enormous opportunity to leverage the huge amount of data that exists in that CRM to empower advisors to better engage with their clients. They just need to have the tools deployed to them that can help them do that efficiently.
Yeah. I mean, that's a good point. I mean, they really, advisors want to spend time with their clients, and there's so many things that take them away from that. Maintaining some of these systems is part of that. You are seeing AI, especially with note taking, being one of those kind of early wins with adoption and being able to help kind of propagate those CRMs. I want to kind of talk about the advisor pricing for a little bit, especially the kind of the AUM, BIPs on AUM. It seems like the pricing, as you mentioned, that they've had scope creep, and that's actually caused fee compression because they still have the same pricing model in terms of it's based on asset management, based on BIPs on asset management. I'm a big believer in pricing should be tied to value, and certainly I think asset based pricing in terms of investment management, that core function is great for that. But in terms of trying to manipulate or extend that pricing model beyond some of the family office services or additional services that an advisor may have. Is their pricing model part of the problem on that, or are there other issues?
I don't think it's the pricing model that's an issue. I think that the challenge is that, and so, as I mentioned, we have a research vertical that looks at retail investors, and we have a large retail investor survey we run every year. We survey over 4,000 retail investors, and we're able to track the extent to which investors expect services beyond just investment management from their advisor. So what we would call, financial planning, typical financial planning services. That has roughly doubled over the last 7 or so years, in terms of the number of investors that expect to receive financial planning related services. The investors' perceived importance of having a financial plan in place has, similarly increased significantly over the last 7+ years. And so what that means is investors are looking to their advisors and expecting more services than they ever did before. Um, and advisors' fees have stayed relatively stable. So unlike asset managers, where we've seen fee compression, right, and a lot of pressure on the need to bring down the fees that they're charging, advisor fees have stayed pretty buoyant, surprisingly so, actually. But at the same time, the expectations of their clients, in terms of the services that they should be receiving, are going up, and that is really the challenge. It's not so much the pricing structure. There's been a lot of talk in the industry about maybe moving away from an AUM based pricing structure. We just don't see that happening. It's still the vast majority of payments are structured in the form of an AUM based fee. But I think advisors really increasingly are and will increasingly need to be more efficient and productive in the way they deliver those services to maintain their profit margin. Otherwise, they need to bring in more people to do more work for the same fee, and that's not a sustainable long-term business model.
Yeah, it seems like the people are looking that the day of the mutual fund wrap is kind of over, right? That the clients are looking for more holistic wealth management, almost like a financial coach from their advisors. Just
Yeah,
kind
and
of
I'd also add to that, Mark, that we've seen a transition away from brokerage, in terms of total advisory
commission based.
compensation. Yeah, we've seen a massive shift away from brokerage and towards fee-based advisory. And so, to your point, that's a very different type of engagement, right? That's an engagement where you have to be regularly in communication with the client. It's not you're selling a product and then maybe checking in a year or so. You have to be consistently delivering value and engaging with your clients. And so that's also a pretty significant shift in the the types of services that advisors are offering. So we've basically seen the share of the assets across retail wealth management firms that are advisory versus brokerage. We've seen that its share of advisory basically double over the last 7 years.
Yeah, it's been a long term trend in terms of whether it be fee in lieu of commission or actually migration of assets from the wirehouses to the more independent model. Kind of swinging back on the technology front, you had one of the highlights in the wealth management technology report. 40% advisors reported not being able to report on held away assets. Having worked at, by all accounts, a data aggregator for held away assets, and the technology's been around for a while. It certainly has operational challenges. Why is that number so high? I mean, there's so many benefits to it. Maybe you could talk about some of the benefits of being able to include those assets. But why are firms struggling to be able to pull in those assets?
Yeah, I mean, the benefits are huge, right? Particularly as we talk about the shift away from investment management more towards holistic wealth management and financial planning. It's a huge advantage to be able to see all of the client assets, regardless of where they're custodied. So that could be a 529 account that's not custodied at the custodian or broker dealer home office. Could be a 401k or a qualified retirement plan. To be able to provide the client a single place where they can go and see everything in one pane of glass is a huge advantage. Not only in terms of delivering a high quality client experience, but also in terms of potentially gathering more assets as well. So there are a lot of advantages to it. I think the challenges associated are not really technological anymore. It's more compliance and firm policy. There are a number of firms that just don't want or will prohibit their advisors from truly managing held away assets like a 401k account, and won't allow them to report on it in client statements. And so, yeah, I think the challenge is there's plenty of technological solutions out there, and they continue to get better. There are challenges with some of the more legacy technologies out there for reporting held away assets, but I think the challenge is less technological now than it is firm policy.
Yeah, it certainly got better. I think credential based aggregation is it certainly has its challenges, but you're starting to see the custodians finally kind of participating in the solution and helping out with that in terms of being able to streamline the access to that information. One of the areas that was also flagged in the report was around integrations. Two-thirds of advisors identified lack of integration between tools as a challenge. Um, Certainly think there has been some progress made in that area, and there are certainly two camps, I think, on the advisory side in terms of best of breed versus all-in-one systems. Both have their kind of pros and cons, but there's still, I think, a ways to go in terms of the integrations and having that really be a more seamless experience. Can you talk to me about why firms are struggling to be able to integrate systems, and what kind of key systems are they not being able to plug together?
Yeah, so we've definitely come a long way in regards to this. I think this is a little bit more of an issue in the independent space, and it's kind of interesting. So I started, my career in wealth management as an advisor in the independent RIA. I only ever worked in the independent RIA channel, and it's just amazing. So I started that in 2011, and here we are in 2025. It's amazing how much the technology has matured and evolved over that period of time. Um, and what we've seen is a lot of advisor practices really showing a preference for kind of integration over best of breed. Um, and that's I think is kind of interesting, and a little bit surprising to me, but I think it speaks volumes to just the power of integration, right? The need, the requirement to enter data in the same data into multiple systems is a major frustration and pain point for advisors. So if I have a client with a date of birth, social security number, social security number is probably less relevant, but date of birth, marital status, dependents, all in my CRM. And then I have to go enter and maintain that in my financial planning system and in other places. It's frustrating, it's inefficient, and there's really no excuse for it, honestly. Um, and so what we've seen is advisors kind of talking with their wallets in going more towards the integrated turnkey solutions instead of having kind of a best of breed CRM and a best of breed financial planning software and a best of breed trading and portfolio accounting and reporting system. Advisors really have, I think, demonstrated a significant preference for integration and efficiency over specialization.
Yeah, they just don't want to stitch it together. And like you said, rekeying that information that invites room for error. And now you're reconciling between systems, and that takes additional overhead. And um, I mean, I do think there is some advantages with best of breed if you can get the vendors to coordinate and the vendors are committed to those integrations. So not every integration a vendor has is going to be great, but if there are certain key ones that they're really focused on, they maintain and work out those use cases can be really beneficial. Where then, especially to like a larger firm, where the investment team can get the investment tool that they want versus the maybe the finance team has a different tool that they want. And, it's really when you start to specialize and you have different departments that they probably want different um, specific applications for. But that's kind of where maybe the comprehensive doesn't quite match the operational needs of the firm, but there's still ways to go. And there's a lot of advantages to it, but there's still a lot of work to do. And I think advisors need to be conscious of when they go that approach too. There's additional overhead. There is an additional cost, an additional premium that they're going to need to pay to make sure that those integrations are. It's not just paying for two systems. You're paying for two systems plus some sort of delta for that integration to make sure it works great. But the other thing is financial services tends to lag behind other products when you take a look at especially consumer technology. Although you do see in some areas, especially with the big wirehouses, with the Schwabs and Fidelity of the world having great, online 24/7 access, real time updates. But in general, on the advisory side, customer experience has lagged somewhat. Why do you see that, and how do you see technology coming to the forefront to be able to enhance the overall customer experience?
Yeah, I mean, honestly, I think one of the reasons we haven't seen the client experience improve at the rate we've seen it with other kind of other aspects of technology is probably just the demand from clients. Um, we ask investors, what factors they consider when they're choosing an advisor. The quality of the technology that they utilize is at the bottom of the list, and so
Really?
yeah, it's just not something that investors, when they're going out looking for an advisor, are really focused on. And so as a result, I think firms just haven't been making the investments necessary to provide a superior client experience. To your point, I think that's improving. Particularly, we've seen a significant increase in the adoption of client portals. There's still a long way to go to get to 100% utilization, but as advisors continue to embrace planning, that client portal, kind of that client vault that can be kind of a hub for the client to store all their core documents, to be able to have that as a resource if something happens to somebody that you can pass on those credentials and give the person full access to their financial affairs. That's a huge win for the investor, particularly when you're dealing with the high net worth space. And so we've seen significant improvements in terms of client portals, but the portfolio accounting and reporting capability, the experience from the investor perspective, I think on average it's okay. But if a lot of advisors, they don't want their clients going to the portal and looking at performance, right?
Right.
They want the client talking to them.
Yeah. They
So
don't want 24/7 access, right?
yeah, exactly. It could be a bad thing actually for the client, if it encourages them to constantly looking at their portfolio. So yeah, I think there's just hasn't been it's just hasn't been an area of focus for a lot of firms, relative to other elements of the tech stack.
Yeah, I think there are some advantages even for the advisor. I think the ability to kind of share documents more securely, right? You're going to need certain information from your clients. You certainly don't want them having emailing sensitive information to you. The ability to kind of have a secure portal, client servicing. I think sometimes clients want to be able to kind of service themselves on some basic requests too, to be able to get the ball rolling on that. But they have to add value to, or else I think they roll it out there and there isn't that much value to the end client. They look at it and they're like, "Yeah, that's great," and then they don't log back in again, and that's the end of that. And the advisors are like, "Well, what's the point of that exercise?" Right?
Yeah, that's
So,
exactly right. Yeah, I mean there are some really powerful tools, and we've spoken with another number of firms that they'll bring in junior people, and one of the things those junior people do is engage with all their clients and show them all the tools that are available to them. Um, and they still just they struggle to get adoption from the end investor, because I think in the mind of a lot of end investors, they're kind of that's why they're hiring their advisors. They don't really want to be managing it. So some of the basic rudimentary capabilities, the performance reporting and portfolio reporting is good. The client wall is great, but yeah, there just hasn't been a ton of innovation in other aspects of the client experience. I was going to say, Mark,
yeah.
just one other area from the client experience perspective that we have seen a transformation in is the way in which financial plans are delivered to their clients
Okay.
by the advisor. That we've seen a monumental shift over the last 7 or so years. We've seen a huge shift away from kind of paper financial plan delivery to real time and interactive sharing of planning with the client, like up on a computer screen or an iPad or some other visual format. And I think that is very transformative to the client experience, so that when the client is meeting with their financial advisor, the advisor can throw the plan up on the screen. They can run some scenarios. A lot of times they can run those in real time if the client has a particular question. And that is really a much more immersive experience than just be handed this tome that's this kind of intimidating stack of paper that is their financial plan. And so that is shifted drastically, and that's been a really important transformation for the industry.
Is his ability to answer some questions on the fly, right? Well, what if I did retire 2 years early, right? What does that impact my financial planning, my plan? Can I do these things? Answer those questions real time with the advisor. I think that's very powerful. I think one of the areas where you are seeing a lot of innovation is around AI, and it certainly wouldn't be a wealth tech podcast. We can talk about AI. I think one of the big areas you are seeing wide adoption on, although I almost expect it to be nearly 100%. We're nowhere close to that, but still, it's high. It's like 50, 60%. I think I've seen it, and I've seen it's saving, 3, 4 hours a week of an advisor, which is pretty significant, is around AI note taking. What trends are you seeing around AI adoption, and what's next?
Yeah, there's been obviously a lot of interest in the application of AI in wealth management. We haven't seen a ton of adoption yet outside of the AI note takers, which we've seen a lot of growth in utilization there, and that's a huge win for advisors in terms of making them more efficient, increasing their ability to be compliant and keep good records and notes of client conversations. That's really where AI kind of has stopped on the wealth management side. We see a lot of innovation though, in terms of vendors and wealth management firms investing in AI in a variety of different ways. I think one of the most obvious applications of AI is compliance, right, in the back office, flagging trades that don't match certain criteria, or identify issues. I think the other thing that's really interesting is the application of AI within the financial planning sphere and the ability to basically enable the analysis to be performed by AI. Um, and once the data is entered into the system. So if you have a client fact pattern, age, marital status, number of children, income tax information, really there's no reason AI, if you even want to call it AI, it kind of verges the border of just an advanced algorithm versus what AI, what AI actually is. But um, the ability to utilize technology to identify financial planning opportunities instead of really, I think what the current state has been historically is the advisors really involved in doing all that analysis and entering um, the recommendation into the financial planning software and modeling it out to show the value and to quantify the value. Um, but I think there's a huge opportunity to leverage AI to do that work for the advisor, which simplifies the financial planning process, streamlines the process, and I think improves the quality of the advice being delivered to the client. Because, even the greatest financial advisor, they're just going to miss some opportunities, right? Um, and, I think that's a place where technology can really be transformative for advisors and clients.
Yeah, I mean, you don't need AI to be making decisions for your clients, but certainly to be able to go through vast amounts of information to be give those initial recommendations, even kind of helping with communication. Hey, what happened with the portfolio over the past quarter? I mean, there's a lot of events that may have happened that you might have forgotten about, especially early in the quarter, that AI is going to pick up on the note taking, and then the agentic AI to be able to launch these tasks based on the meeting with the client is really powerful. I do think sometimes too that advisors are probably experiencing the benefits of AI without knowing it directly because the vendors are starting to bake it into portfolio management. They're doing part of the reconciliation process. These vendors should be employing AI to be able to do kind of these massive data sifts to be able to take a look at outliers or when things are missing cost basis or things that would have shown up at an error when you're running a client report are now getting catch so much earlier in the process, and vendors are just baking that into their product, and some may be overhyping it. I think people love to put AI in the end of the name and think they're 10x, but it's really no different functionality than what it was the day before without AI. But there's certainly some big benefits around it, around with especially with big data. What is the future of wealth tech called? What do you see as the major trends 3 to 5 years? I know five just seems like things are changing so rapidly that that's a big stretch to take a look at. But what's your prediction over the next few years?
Yeah, I think AI is really the number one potential disruptor in kind of an enabler of transformation in this space. To your point, Mark, with all the data that advisors deal with, there's a huge opportunity to implement. And again, I'm not sure where you draw the line and say, what is AI versus an advanced algorithm. But the ability to better and more effectively leverage the monumental amount of data that exists within advisor practices to streamline their efficiency and to make them more productive. That's really what they need. And so, I expect to see over the next, 36 months, real kind of real world application of AI in some of those areas we're talking about in digital marketing, in CRM, in financial planning, in, kind of trading and rebalancing, really all oriented primarily around improving advisor efficiency and kind of as a bonus, hopefully delivering a better client outcome. I think the biggest impediment is compliance, right? It's just a very heavily regulated business and there's a lot of risk. And, you have to be 100% confident or close to that the outcome you're getting from your AI technology is accurate. Um, and as a result, a lot of firms have been very hesitant to deploy AI, but I think the industry will figure it out. But as we look over the next 3 years, I think that's the number one, I think, opportunity in this space. The other thing that I expect to see is better tools for advisors to manage client portfolios. We've seen a lot of focus in the industry trying to move advisors out of the portfolio management business and to defer that into the home office or into a TAMP. We've seen progress there, but most advisors, still want to have some level of control over their client portfolios. And just outsourcing to a model just won't work for them. So we see firms increasingly investing in their advisory platforms to enable better control of the basically better control of the parameters around the investment selection and portfolio construction, but utilizing kind of the home office to then deploy those instructions. And so that can be like, tax optimization when you're bringing a new client on, tax transition. It can be, like I mentioned, kind of almost like a hybridization of the portfolio management process, where some of the functions happening in the advisor practice and some of it's happening in the home office, but the advisor doesn't have to give full discretion outside to the home office. So I think that's another area where we're going to see continued innovation, and really to empower advisors to kind of find the best of both worlds, where they have control, but they're also more efficient. So I think those are two areas that we're really kind of keeping an eye on in terms of innovation.
Yeah, I think those are all really good areas. I do think that some of the staffing issues that advisors face today, I think AI is going to have a major impact in helping with that. I think the other area that you see is, alternative investments are going to continue to come down from the family office to the advisor. Even talking about being able to have private markets and private investments within 401k accounts. Historically, there's been so much friction within the investment life cycle for alternative investments that has been difficult to get beyond the family offices. Family offices are choking on these investments because they're all document based. That AI is having a big movement there, and I think you're going to see that democratization of that asset class and broader distribution of that asset class due to AI. I think hopefully the advisor will be able to spend more time with their client in meaningful ways, and that less of those low value functions, first mile data aggregation, those type of things are going to go away, and really make that advisor truly productive. The future's bright, though. I think wealth management, especially the independent model, the multifamily office model in particular, is a winning model. Being a lot of proliferation, which I think is great. So I think you're going to see like a continued growth in that area as well.
Yeah, I agree. And certainly the democratization of alternatives is a really important theme. We actually sized the marketplace for the amount of retail investor assets held, through their advisor in alts, and it's growing significantly. That's still a very small percentage, right? Because it's not applicable to everybody. But to your point, Mark, like the operational aspect of managing illiquid alternatives is really cumbersome. And there is a lot of technological innovation happening in that area that's enabling practices to utilize those solutions much more efficiently. And that also provides a better outcome for the client too, Greg. So it makes the whole process easier. We have an entire team that's looking at that.
All right. So I like to end the podcast on a personal note with 3 questions that have nothing to do with WealthTech. We're both Boston guys. So what has been your favorite Boston sports moment? We've had so many over the past 20 years, but what has been your favorite?
I know it's hard to choose. I'm curious to hear what yours is. I think for me, it's got to be 2004, the Red Sox, 80-year drought. And I'd say less winning the championship and more beating the Yankees, and that epic comeback from down 0-3 and winning. That's something I'll never forget.
Yeah, I mean, I'd have to say there's 2 moments out there, and they started early in their run. 2004, like people even forget about the World Series, and the World Series was a sweep. It was beating the Yankees, but more importantly, it's kind of that Greek tragedy where the year before, where Grady Little left Pedro on the mound for too long, and they lost in the traditional Boston fashion, and just that kind of whole redemption story certainly was one of the best. I think obviously the Patriots, their first win in 2001. I think the snow game against Oakland and that Vinatieri kick was fantastic. Certainly, the Super Bowl was a absolute nail biter against St. Louis. Um, I find it's funny thinking about some of the old Pats wins. There's a lot of wins that
It's-
the Patriots had where the franchise that they beat was never the same again. Certainly, that Oakland team you never heard from again. Atlanta. I'm sure people that are not from Boston listen to their podcast are like, okay, whatever. We're so sick of the Pats.
Yeah, no,
Um,
there's a lot of moments to choose from in sports history, which in Boston sports history, which is great because when I was growing up as a kid, there we didn't win anything. And then,
Oh, it was
yeah,
nothing but pain. Yeah. Yeah. My daughter doesn't understand because my oldest is 23 years old. She was literally born like when the run happened. So she knows nothing but the good times. But what's your favorite thing about Boston?
I'd say it's the history. I'm a big history nerd, so I just love the colonial history of Boston. There's just so much of it; it's everywhere, and that's pretty unique. Um, and not everybody gets to experience that, so that's pretty special to me.
I do love the fact that when you're in the city in particular too, the old versus new dichotomy is pretty cool. It's obviously great that we're on the water, unless it's January and then it's not so great. But I love the accent too, which is unfortunately going away. That Boston accent's a thing of beauty.
The
I love it.
Boston
All right,
weather I could
final
do
one.
without.
Dunkin's or Starbucks?
Boys, people are gonna be upset about me about this, but I got to go Starbucks.
Oh,
I love Dunkin'. I flew JetBlue home a couple days ago, and I love
yeah,
the fact that they give you Dunkin' on the plane. It's a little taste of home.
right.
But yeah, I'm a Starbucks guy.
Dunkin' Donuts iced coffee all year long. Like I get back into Logan. First thing I do is Dunkin' Donuts right by the baggage carousel. The other people that you don't understand is like Dunkin' Donuts doesn't seem to translate. Like when you go to like Chicago and you get a Dunkin's, you're like, this kind of blows, right? So, oh, it's maybe it's the
Well, the other
water
question
around
is, are
here.
you a hot coffee or an iced coffee? I do not drink iced coffee. Even down in the
No,
Caribbean, I'm still drinking hot coffee on the beach.
Dunkin' Donuts iced coffee is like unicorn blood. Don't No sugar, no cream, no nothing. Perfect. Love it. All right, Michael, this has been great. I really appreciate you being on the podcast.
Yeah, I've enjoyed it, Mark. Thanks. I appreciate it.
Good stuff.
All right. Take care.